Thank you so much, Cooper. And thanks to the Injective team, Mirza, Esther, Noah, fantastic event, incredible venue. As Cooper said, I'm Dan Spuler, head of industry affairs for the Blockchain Association. I came up from Washington, D.C. yesterday to really participate in this because Injective is a great project, it's a great member, and we're here to support it. And I'm really excited to be joined today by Deputy Superintendent John Melican. I've known you for a few years. It's a pleasure to have you with us. Now, you've been in your role at the NYDFS for about a year or so. Can you start by sharing a bit about your professional background and what led you to focus on this regulatory enforcement and digital asset space?
Thanks, and it's a great pleasure to be here with you all. Just by background, I started out life actually about a block and a half from here at the Manhattan DA's office, where I was a prosecutor and spent about 8 years there, I think, and the last 4 or 5 on financial crimes prosecutions. That's where I was introduced to the wonderful world of money laundering, and following life at the DA's office, I found myself working at some large financial institutions, working in their compliance departments and their BSA AML programs. Sitting on that side of the table, being subject to regulation for many, many years was a great pleasure, but it was also a great learning experience and one that I draw on every day in my new job. I spent some time in consulting, working mostly on the HSBC monitorship before I joined a provider of blockchain analytics, and that's where I really worked with a lot of the folks in this room and a lot of industry participants, and got very involved in crypto and really the compliance aspects around crypto. The opportunity came to join DFS, and I really wanted to return to public service, and it's been a great pleasure over the last year to work with tremendous staff at DFS and see the expertise that they have already, and to help guide them through the next years in the future as this industry continues to change and develop.
Well, let's get right into it. And I like to say it's a first among equals among the state regulatory agencies, much as the same way the Federal Reserve Bank of New York is considered. Incredibly important jurisdiction here in the financial capital of the world. And it plays a critical role in shaping the financial regulations, not just within New York, but nationally and even globally. And so for those here who may be newer to your work, and could you give us a brief overview on the department's mission and perhaps highlight a few key initiatives or priorities that have emerged since you took on this role?
Sure. I think just by background, Department of Financial Services really came around in 2008, post-financial crisis, and it was really the merger of New York State banking and New York State insurance. When you think about the scope of the state regulator here in New York, it's pretty incredible. We have about 3,000 regulated institutions, slightly over 1,000 different financial institutions or banks and bank-like organizations. We have about, I think it's around 2,000, almost 2,000 insurance-related companies. It's about 10 trillion in assets. There's 120 foreign banks, 15 GSIBs that are here in New York. So as an institution, DFS has tremendous breadth, tremendous experience. New York State banking goes back over 100 years. New York State banking law has been in effect since New York really emerged as the financial capital of the world back in the 1800s. So there's a lot of tremendous experience to draw on at DFS. In 2015, about 10 years ago, DFS had the forethought to really issue crypto-specific guidelines in the form of Part 200. And that created, as many of you know, what's predominantly known as the BIT license, and that allows for entities to conduct virtual currency business activity here in New York with specific guidelines that were not directly drawn from applying banking law or regulations designed to regulate money service businesses, as was done before and still exists in many places. We have very specific regulations here in New York designed to both regulate and encourage development of innovation in this space here in New York. I specifically work on the limited purpose trust side, which is under the BIT license. The trusts are granted the powers to comply with Part 200. They have additional powers that make them attractive for some businesses. And in particular, we see a lot of stablecoin activity and custody activity conducted out of the limited purpose trusts.
Yeah, I was going to get to that actually. I'm glad you brought that up because one of your key responsibilities includes overseeing these entities to establish trusts in New York State, and particularly those that involve custody, tokenization, and even stablecoin issuances. And so the trends, my question is, what type of trends are you seeing now with these applications, and what are you and what is NYDFS? Are there any new approaches to these business models? And I mean, they're a rapidly growing part of this ecosystem.
Yeah, if I had to identify a trend or two or three, it would be stablecoins, and stablecoins. Pretty much what we've been seeing a lot of, and it pretty much dominates much of my agenda for limited purpose trusts. That trend has been continuing for some time. You know, we started out issuing very specific stablecoin guidance in 2022. And, you know, again, Superintendent Harris, you know, has been innovating and leading in this space. Regulation has to be viewed as both, you know, a means to ensure safety and soundness and protect consumers, but it's also a very effective means to encourage the development of this industry. Putting out issued stablecoins, saying specifically, here's what you need to do for reserve assets, here's what you need to do for attestation, here's what you need to do for redemption. Giving those guidelines and setting those expectations gives the industry something to work with, to react to comply with. You have well-meaning, well-financed actors that can then come into this industry and say, here's what we need to do, here's what we're going to build around, and here's how we're going to advance this project. So we've seen that really as a huge driver in the last couple of years, and certainly in my time there. As to our approach, I think it's interesting, and it's one of the reasons that I really wanted to be in this position. We're trying to solve very novel issues, you know, and it's a remarkable industry, and why it's a lot of fun, and I'm sure it's why you're all here, is it's a little bit like a new frontier. You know, this isn't well-trodden ground. Everybody doesn't know exactly what's going to happen. You know, issuing a new ETF may be exciting, but it's something that we've seen, you know, before. When we talk about stablecoins, it almost in our world, because it's been around for a few years, seems old school, but it's still relatively novel, and we're still trying to come up with a collaborative approach on this. We want to work with the industry, hear the ideas of the industry, but we need to take a long-term view to how this is going to be regulated. A good example of that is even in the short space that stablecoins, US dollar stablecoins, have been around. You know, they continue to change and evolve. We now see global issuance of stablecoins. So stablecoins that are issued here in New York, in Europe, and in Asia. We're now trying to take an approach that would coordinate between those. How do we protect New York consumers? How do we uphold our regulations here in New York? Or the industry who wants to do this globally. So there's a lot of coordination, and there's no very specific solution that jumps out. There's no magic bullet to this. So we have to work collaboratively with the industry and listen and learn and still follow our regulations and our guidance to make sure that, you know, we're protecting consumers, because ultimately that's forward. Stable coins will only be popular and only be useful as long as they're safe. You know, that's our prime directive here, is to make sure that we are building products with our regulated entities that are protecting consumers, drive safety and soundness, which will in long term help this industry develop.
So there's a lot of misconceptions and confusion with the taxonomy, with the classifications of digital assets, crypto, within the regulatory landscape. And part of that to blame is the lack of national, market structure clarity, which of course we're working on pretty hard in Washington. The stablecoin legislation, obviously that's imminent. But what, from your vantage point as a state regulator, what are some of the more common misconceptions you encounter at the NYDFS and the approach to crypto oversight?
Yeah, it's a good question. I think the common misconceptions, I think, are probably that the regulation is incredibly static. I think there's a view that says, okay, here's the regulation and here's how it's going to be applied. I think what we've seen and what DFS has done is continually develop and innovate. Since issuing the Part 200 regulations in 2015, and even in the the time that Superintendent Harris has been in office, we've issued 9, I think, separate guidances around virtual currency. And we've put out guidance on stable coins, as were mentioned, coin listing policies, consumer complaints, to just name a few. We are constantly, and the superintendent is constantly looking to give guidance to the industry to make sure that we are staying current and providing a regime that allows industry to develop safely. And I think the misconception is that, there's one way to do this. What we're seeing is that there are often novel projects that our regulated entities bring to us, and we have to work to fit them into the existing regulation. And we're constantly taking that input, and the superintendent is very focused on making sure that we are constantly looking ahead to say, what guidance do we need to put out next? How do we stay ahead of these current trends? How do we provide appropriate guidance and protect New Yorkers and protect, essentially our regulations from being outpaced by the developments in this industry. So the misconception is probably that this isn't an evolving or innovative space, and it really is, and that's why it's an exciting place to be.
No question about it. And the commissioner's been terrific. She's been very active, even at the national level. She's spoken at 2 of our events in Washington over the years. So we're incredibly happy to have her, continue just with that engagement.
Yeah.
And the federal posture, I mentioned this in the previous question, just the federalist perspective, the push towards crypto and regulations has really significantly changed, certainly since the election and certainly since January. It's night and day compared to, I think, where we were, even a year ago. And in your view, has the broader regulatory direction changed, and what implications does that have for the state level, for example? You've been ahead of the curve. I mean, the BIT license, 10 years old, I think in many states, in many ways, have been ahead of the curve of what's been happening at the federal side. But what are some of the implications from the state side?
The implications, we don't know yet. We will see as the regulations get passed. I mean, as you alluded to, and you and the association would know best what's coming down the pipeline. But I think our position in New York is that we welcome federal regulation. We've been very heartened by the fact that Superintendent Harris has been approached by both sides of the aisle. She's been very active in speaking to those involved in creating this new regulation here in the U.S. The superintendent has been consulted abroad as well, so very much involved in the process of helping move crypto regulation forward globally. So I think the implications will be seen, but the good news for New York and our regulated entities is that when we look at the new federal regulations, we look at the regulations in other states, we look at the regulations in places as far away as the UAE or Asia, and certainly with MiCA, we see reflected in these new regulations the core values, the core structure that New York has put together. And what we're hoping for really with the new federal regime, I think, is to see it evolve and develop. We've been incredibly fortunate, particularly under Superintendent Harris, to have the resources that we need. What we had was really Part 200 developed since 2015, but in the last 4 years, we've added 60 people to the virtual currency group. I'm not entirely sure that there's another regulator that even has 60 people, and that's how many we've added to keep up with the demand here in New York. And it's one thing to have a regulation, but it's another thing to have the ability to implement it. And that's what the superintendent's really been doing with us and working very closely with us, is to make sure that we have the resources, the technical capabilities, the access to vendors that we need to keep up with this industry. And as we look to the development of both our federal partners, our other state partners, and foreign partners, we hope that they all go down that same road of getting the right staff. We're happy to lend our expertise and hope they look to us as they've looked to the superintendent for guidance on the regulation, and then work with them as partners as we always have in the past.
Yeah, so you somewhat answered the question. I guess I was going to ask, if a federal crypto framework were to pass, how do you see that intersecting with the existing state licensing regimes, particularly the BIT license? Can it continue to coexist?
Absolutely. I think we welcome the federal partners. I don't think anyone thought in 2015 that New York would still be relatively alone as a regulator of crypto almost 10 years later. The federal partners will come online. They will be, our partners as they are on the banking side. We've worked well with all the federal regulators in banking and insurance for many years. So we don't expect anything to really change. No matter what happens, we have our regulations in New York. We will continue to follow our guidance and our regulations and execute on our mandate to protect New Yorkers and New York consumers.
Now, stablecoins continue to be a major focus in policy conversations in Washington, and at the state level. And you've been long out of front on this. New York State's been way ahead of the curve on the guidance. And how would you describe the New York State DFS's approach to stablecoin oversight? And how would it compare, per se, to other jurisdictions, domestic and international, and how you're handling it?
Yeah, I think we will all seek the same level at some point. I think our regulation of stablecoins has, as you mentioned and I mentioned, has been out in front. We really have the means to send in examiners. We have regulated stablecoins since inception. Since we start with a smart contract and we go all the way through the green listing of tokens, U.S. dollar tokens here in New York. That process is very well heeled. We have the technical capability to review these tokens. We have the technical capability to examine the institutions that issue them. We have, through great fortune, the ability to work with our partners on the banking side inside the department. We are oftentimes able to work with our partners on banking who are banking the reserves that the stablecoins are bringing in. So the scope of DFS really works in our favor when we look and provide a holistic approach to regulating stablecoins. As they develop across federal regulation, we don't expect much to change. We don't expect that the reserves will somehow be put somewhere else other than banks that exist in New York or federally regulated banks. But we think that approach of holistic regulation, coordination between those regulating the issuance of the digital asset and those regulating the reserve assets should be well coordinated because, as we said before, stablecoins depend on the safety and soundness of those reserve assets. The moment that those reserve assets come into question, that's when there's going to be an issue with this industry. So we look forward to everybody coming to the same standards that we're enforcing here in New York and leveling that playing field as much as humanly possible so that all issuances of U.S. dollar stablecoins have the same safety and soundness that we.
The coordination route that you had mentioned, it leads me to the next question because the coordination across the states is increasingly important. Many of our members, especially the exchanges, obviously they have to have multiple MTLs across the country. They need to coordinate with many, many different states and licensing regimes. How has the DFS and how have you worked with other state regulators to align on the compliance topics, expectations, and just to reduce regulatory fragmentation for these companies across all the multiple jurisdictions and patchworks?
We're again fortunate. The superintendent has taken on, I think, 2 or 3 leadership roles among state organizations. We coordinate very closely with our fellow regulators in other states. There are constant conference calls and separate meetings. We have memorandum of understanding that allow us to share information at certain points. It is a well-coordinated effort. The leadership that New York has been able to provide to other states who are coming online with crypto-specific regulation is helpful in reducing that fragmentation. And again, seeing New York's Part 200 reflected in other states helps really bring a commonality to regulation across the states. Again, the federal partner coming in will again help smooth that out. But states still have that very important role. I mean, look at New York's Part 200. This was something very novel. That ability to innovate, the ability to issue all the guidance that the superintendent has been able to put out over the last couple of years is really something that's unique to the state level regulation. You only have to look to how long it's taken the federal regime to come online to see that the states can be more nimble. And the states move very quickly. We can see the results of our experimentation very quickly. So there are advantages to using that state process to inform any federal process that may come along and have a different time scale in terms of developing regulation. But I think the states will continue as they have to innovate and to lead on these issues because they have the ability to do that. They have, smaller groups. They have a more narrow focus on a state level sometimes. So I think the states will continue to innovate. But they're certainly going to welcome the federal partners. And it's something that we're well used to on the banking side. All the state regulators have coordinated with federal regulators in banking, insurance, and securities, money service businesses. There's been a long history of coordination among the states and the states with the federal regulators. So the advent of federal-specific crypto regulation, I don't think is going to change anything. I think it's going to probably drive a better result for the industry.
So I want to shift to a broader topic, and it's a topic that's on many folks' mind at the policy level and just on the industry business side, artificial intelligence. It's reshaping financial services, and regulators are really beginning to take a look at its growing implications and how to grapple with that. There's a big turf war right now with the feds and with the states. How is this going to be regulated? Can it be regulated? And our members, there's just been a large uptick, too, in just agentic AI projects in the crypto ecosystem. There's a lot of crossover. We're seeing a lot of talent move into that direction or bring it within the blockchain ecosystem. How is NYDFS approaching artificial intelligence? Is there anything you can add to that? And in terms of external supervision, and will that play a role?
New York's going to continue to do what it does. New York is always going to try to lead, and historically that's what we've done. This is going to be no exception. Already, I think the superintendent has put out 2 pieces of guidance around AI and the use of AI, and there was guidance around deep fakes the other day. This is not my particular area of expertise, but what we do have is a deep bench of talent at DFS, and until you work there, I don't think you can really appreciate the level of dedicated people that are there and the breadth of talent that we have to address these new issues. So we've been out front on issuing guidance on regulations, particularly around insurance. I know there's a lot of issues around insurance and the use of AI, and the superintendent and the department are very concerned, with making sure that we're protecting consumers and that this powerful technology is being used for its best purpose. So that's going to continue to be our focus. Internally, DFS continues to innovate. We have programs to use AI to review voluminous documentation around insurance or climate change and public disclosures. We have a chat bot that's being developed. There's nothing more important than really showing by example that we are looking to this new technology, just like all the industry participants, that we're not somehow saying it's not for us. We're engaged with AI for our own use, and that allows us, I think, as a department to better gauge its best use and to understand how our regulated entities are seeking to use it and the impacts it could have as they engage with the public.
You had mentioned engagement and in your last comment, and that's a really important word, especially for what we do at the trade association level. Engagement with policymakers and regulators is incredibly important. But over the years, especially over the last 4 years at the national level, a lot of our companies that we work closely with have been reticent to interface and to interact with some of their primary regulators, including the SEC, FinCEN, Treasury, CFTC. Now that's changed in a good way. I think the last 6 months especially, it's been quite the opposite. There's been the federal government has been opening their doors asking for input. There's a crypto task force at the SEC now. I'm curious on an engagement end at your division, what engagement approaches have you given? And is there any advice you could give to our members and folks in the audience here that may be interested in coordinating or speaking with the NYDFS?
Certainly, we have been, open and transparent and engaged. I think, as I've mentioned before, the hallmarks of our engagement are the staffing, the guidance, and the regulation. So, with the specific regulation, it allows the industry to really come in and say, okay, how do we meet these expectations? Are we covered by these regulations? And we are open to that engagement. We have a very robust and powerful applications process where we take applications from industry participants. We engage with them, even before they formally apply, to work with them to understand what it is that they're bringing to us, how they anticipate their business developing. We learn more about their structure, their finance, their future plans beyond, just registering or trying to start a project. So when we go through that applications process, which is very robust and designed to really allow the most strong and most prepared applicants to make it through and receive a license. That process is very open, and we really do encourage folks to come to us with their projects early and often. That can be just a discussion of, here's what we're up to, we don't believe we need to be licensed, and we're happy to engage in those conversations. On the staffing front, we have the people to engage with our entities. One of the things that's absolutely remarkable is we don't just do annual or biannual examinations. What we do have is a robust process of engaging with our entities on a regular basis. Once, twice a month, sometimes when things are more active, we're talking to our entities on a daily or weekly basis to really understand what their new projects are, what they're attempting to do. And in this industry, we know, and the superintendent knows, that we have to be constantly engaged. The level of innovation that our entities are engaged with has to be met with a level of engagement from their regulator. We can't just sit back and be surprised at the end of the year that you have, twice as many clients and twice as many product offerings. We need to be engaged on a regular basis. We have a process of material change requests where we field and approve or review material changes to business on a regular basis. So we've been engaged with our entities. As far as advice, I would say never surprise your regulator. That's always a bad idea. It's like family advice. Don't surprise your parents. That's always a bad idea. But we are very open to those discussions, and I think coming to the regulators early is probably the best advice you can have. No one has ever said, oh, we're upset that you came early with this initiative or this report. If you're having issues, coming early is always better than coming late. We understand that, and I understand as a practitioner on the compliance side, you want to have your arms around an issue before you bring it to your regulator. You want to have this buttoned down in a plan before you go. But there's a balancing act between getting yourself satisfied that you have a plan to get out of this issue, and then informing your regulator and not waiting until it's a little late in the day to tell them you've had an issue. So that balancing act is one to get right, but it's certainly one you want to err on the side of informing your regulated entity, and we've had great experience with that.
So thank you for that, and that's terrific advice. I hope everybody reports back to their team to share that. As we finally wrap this up, is there a message, or this might be another advice question, but as we wrap up this conversation today, is there another message or takeaway you could give to the audience? And this audience is full right now of industry leaders, innovators in the digital asset space. Is there any takeaway they can leave from our conversation today?
Yeah, I think the takeaway should be that New York in particular has been out front for this industry, that we see regulation in a very positive way. Regulation and crypto have to coexist. What we see is that we have provided a regulated platform that the industry can work with. Working with regulators has traditionally led to tremendous investment from hedge funds, investment advisors, banks, other formal institutions looking to fund this business. And they see industry coming to regulation saying, I want to be regulated, I want to be licensed as a hallmark of a good, solid project. So we see those things as beneficial, mutually beneficial, that we understand what's going on in the industry. We see that you're complying, you're seeking out the licensing, and that has, fundamentally drawn a lot of investment. Likewise, consumers, this is new to consumers. You know, most of the consumers that this industry seeks to attract don't have a wallet. They don't know how to create a wallet. They don't know what DeFi is. But what they do know is that banks have been regulated, insurance companies have been regulated. And as they see this industry moving towards regulation, I think there's a comfort level that comes with that. So the word of advice or takeaway would be that this can be and should be a mutually beneficial relationship between regulators and the institutions that seek out regulation.
Well, this was an incredible conversation, and I want to thank you, for your time and your advice and your opinion, Deputy Superintendent John Melican. Thank you.
Thanks. Thanks,